Immigrate to UK and pay zero tax. This might be a dream for some people, and it is something that could be possible for you. Maybe. We're going to discuss today about what is called the UK Resident Non-Dom program. I'm going to explain to you what is the difference between domicile and residency, how you could potentially pay a lot less tax if you're moving to UK, where you could end up paying more tax because of that, and we're going to dive into it. So I hope you are excited and ready to go along with us. If you haven't already, please hit the subscribe button, hit the notification bell. Make sure you don't miss out on any of our future videos. We try to produce great content for you every single day. If you like the videos, please share them with your friends. Please give them a thumbs up. If you don't like them, please tell me why in the comments. And if you're interested at all in international planning, so where to move, how to set up an international company, how to do international tax planning to pay the lowest legal amount of tax, asset protection, etc. So on the strategy side, as well as implementation, helping you to set up companies, open bank accounts, get residencies, get citizenships, etc. Please reach out to me. You can book a call, quarry.fm/Michael Rosmer. There's a link in the description below, or you can check out our websites, offshorecitizen.net and offshorecapitalist.com. Okay, let's dive in. So UK is one of a handful of countries that has two concepts that are not in a lot of other places. So if you're from, I don't know, France or Canada or a bunch of other places, then you have the concept of residency, but you don't have the concept of domicile. UK and a few former UK countries, so for instance, Malta, Cyprus, Ireland, etc., have a distinction between your domicile and your residence, okay? And they allow you to say, okay, if you relocated here, you might qualify as a resident, but that doesn't mean that you're necessarily domiciled locally. And if you're not domiciled locally, we'll cover what that means in just a second, then you could have very special tax treatment, which could be quite favorable for you. So what is domicile versus residence? So residency, from the UK standpoint, is determined by the statutory residency test. It's largely a function of how much time you've spent in the country in a given year, but also over some previous time, as well as some ties, right? So in most parts of the world, if you're 183 days, for sure you're resident, and it could be a lot less depending. So for instance, in UK, I've done some stuff on the statutory residency test and how there's the automatic overseas test, and then the automatic residency test, and then kind of the blurred line. So you can go and check out that video. But you can be resident and not be domiciled. Domicile is, loosely speaking, where you consider your home to be. And the interesting thing about this is you get to say, hey, listen, I don't consider that I'm domiciled in UK if I moved here. Really, not really an option if you're a citizen. But if you've moved there as a foreigner, then this is pretty great. Under these circumstances, you can qualify for something called the remittance basis of taxation. Okay, so I've done some videos previously on territorial tax and worldwide tax and remittance tax. We're going to cover it, how it applies in the case of UK. So this is for individuals, this is not for your companies, but that's kind of good. So let's say you move to UK. All right, now you're going to have UK source income perhaps, and that's always taxable in UK. So that's straightforward. If you're working in UK, you have a job, etc. If you have a UK company, if you have UK property, etc. Those things, that's all taxable to UK. Fairly simple. But if you have foreign income, then if that income is not remitted to UK, then potentially you could not be subject to tax on it. So what are some good examples of this? Well, maybe you have overseas investments, right? Including overseas companies. You might have investments that you're doing. You might be making loans. You might have foreign property, etc. That's all generating income for you. And so long as you don't bring that money into UK, you can possibly not be subject to tax on this, okay? So first of all, as a non-dom, your first £2,000 a year are not taxable, not reportable. Who cares about that, right? That's not a big deal. The bigger thing is being able to have this literally unlimited size basket, which makes UK one of the more attractive places, maybe along with New Zealand, that's kind of like a developed first world country where you can move and, at least for a period of time, have very favorable tax rules, okay? So how does this work? First of all, what you want to do is you want to set up separate banking so it's very clear which is your unremitted income and which is your remitted income. That bank account should be a foreign bank account, not a UK bank account, okay? Now, you can't spend that money into UK, so you can't pay your rent, you can't pay for your kids' school, you can't do any of that kind of stuff, nor can you go abroad, buy some things for yourself, and then bring those things into UK, right? You can't be like, oh, hey, I'm gonna travel to Germany, spend the money in Germany, therefore it was never remitted to UK, but I spent it by buying, a new BMW, and then I'm going to drive that BMW to UK and use it. No, that would qualify as you remitted it into UK. So you're bringing it into UK, it's off limits, okay? So this works well for people who are in one of two situations, I would say. One is they've already accumulated enough wealth that they don't need to worry about bringing the money into UK all the time. The reality is that they've already got money that they can exist off of, right? Number two, people who the majority of their income is foreign. It fits the criteria if it's not earned income, etc. And as a result, it can potentially not be taxable, okay? I'm going to give you some caveats in a minute about where that comes into play, but then they would only bring a certain portion in, and then they would pay tax on that. Okay, so that's the first thing. Is there some downsides to this? Yeah, there are. So first of all, you have a exemption under UK tax rules where it depends a little bit on the type of income, but basically you get £12,500 as of today per year that is tax exempt, okay? So that exemption goes away. Now, if you're a high income earner, who cares really, right? That's not particularly relevant. So, okay, you lose that, but on millions a year or something like that, it's no big deal. In fact, even off a few $100,000 a year, it's really not that big a deal. So you lose that, meaning that all of your income that you do remit is taxable immediately, okay? Number two, you're always taxable based on what's called the non-savings rates, okay? So there's different tax brackets depending on the type of income. You have a 20% tax bracket is the lowest, then 40, then 45 for income over £150,000 a year. So those are going to be your tax brackets. Now, the noteworthy thing here is this is true even if you would normally be having dividend income. Okay, so dividend income is typically taxed on what they call an arising as basis. And the arising as tax rates would normally be 7.5% for the lowest tax bracket, so quite a bit lower than the 20. 32.5% for the next tax bracket, so again, lower than the 40%, and 38.1% as opposed to the 45%. So what does this mean? This means that when you're bringing money into the country, especially, normally maybe you would have a favorable tax rate as dividend income. Well, now you don't have that favorable rate, right? Now you're just paying this full rate. You don't have any exemptions, etc. But the key is your investments, and I think this is the really big part, okay? Essentially, you can defer and grow your wealth internationally without paying tax along the way. So let's say that I'm doing venture capital investing in Silicon Valley, right? This is probably like the most extreme, best example, right? I say, okay, great, I'm investing in Silicon Valley. I have these companies. We do some exit. It takes place outside of the country, etc. It's on a remittance basis. I don't remit that money. I don't pay tax on it. I reinvest it. And I can do this in theory multiple times over, growing that pool of wealth quite substantially. And now, even if I bring it in at that point, okay, yeah, I'm going to pay tax on it at that point in time, but at least I got to grow it tax-free, kind of like a giant savings account or a giant retirement account, right? Or the flip side that can happen is you could then leave the country, right? Let's say that you moved to UK for 6 years, for a simple example. Okay, so you moved to the UK for 6 years. After 6 years, you decide to leave. All right, when you decide to leave, now you can go and potentially you can go somewhere where, well, that's your money now, so you're not taxable on it, and you're ahead of the game. So this is potentially a really good thing for people who are moving to UK, not for the long term. Now, if you stay there for a long time, then they kind of penalize you for that, okay? So if you have been there for 7 of the last 9 years, then you pay £30,000 a year in a fee for this basically privilege, okay? So all of a sudden you have this on top of everything else, you're paying £35,000, so, or 30,000. So if you're in a situation where your income is not super high, right? Well, that could, add up to a substantial amount of tax, right? If you stay there for 12 of the last 14 years, then it goes up to £60,000 per year. So again, £60,000, in comparison to if you're making millions or something, is not a huge amount. But when you reach that threshold, let's say you were making mid 6 figures or something, well, that could be, a large enough added tax to not justify it. So anyway, the whole point is if you're in that situation where you're going to come in for a while and then leave, this is fantastic. If you don't need all the money in the country to live, etc., that's fantastic. You can, of course, continue to spend this money outside the country. So you could buy yourself a vacation home in Spain or, Portugal or something like that. You could go and you could, pay for a vacation in Thailand, or, you could, there's a bunch of different things that you could do with that money in addition to investing. But the real benefit long term is if you can use it to grow that wealth on a tax-free basis. So anyway, that is the UK resident non-domicile program. I'll do one. Ireland has one as well. I'll do that. And I've touched previously on the Cyprus one and the Maltese one. I'll maybe look at some other places as well. I hope you liked the video. I hope it was informative to you. If you have questions, please put them in the comments below. Again, if you liked the video, give it a thumbs up, subscribe to the channel, make sure you hit the notification bell. If you, have something you'd like to give us feedback, really appreciate it. Put it in the comments below. If you have a topic you'd like to see, let me know about that as well. You can check out our websites, offshorecitizen.net, offshorecapitalist.com. You can book a call with me, clarity.fm/Michael Rosmer, link in the description. And I will look forward to seeing you guys on the next video.